Let's talk about trend-following strategies for Forex trading, because if you've been in the game long enough, you know that catching the trend early can mean the difference between consistent profits and chasing shadows. Now, trend following isn't about predicting the market. It's about reacting to it and riding the momentum like a surfer on a clean wave. So, what makes a good trend-following strategy? First, you need confirmation. A trend isn't a trend until multiple factors line up. One of the classic approaches is using moving averages, something simple like the 50-day and 200-day EMA crossover. When the 50 crosses above the 200, it's a potential signal that the market is shifting into an uptrend. The opposite for downtrends. Now, layering in momentum indicators like the RSI or MACD can add another level of confirmation. If you get a moving average crossover and the RSI is pushing above 50, that gives you a bit more confidence to pull the trigger. But don't stop there. Look at structure. Are higher highs and higher lows forming? Are previous resistance levels becoming support? That's how you validate the trend is real and not just a false breakout. Another killer tool is the Donchian channel. This tracks the highest high and lowest low over a specific period. A breakout above the channel signals a potential uptrend, while a drop below the channel hints at a downtrend. This strategy is especially useful in markets with clean momentum, but just remember, there will be whipsaws. It's not about being right all the time. It's about being positioned when the big move happens. But let's be real, manual analysis takes time, and no one wants to be glued to their screen 24/7. This is where automation becomes a trader's best friend. And that's exactly why tools like the Trading Management Solutions EA from TakePropips exist. It's not just about automation, it's about smart automation. Imagine having a built-in trend scanner that instantly shows you the trend direction across all your currency pairs and timeframes. No more flipping through charts, no more guesswork. When you can see all your pairs flashing green or red in one glance, you're already ahead of the game. And let's talk about the trend follower strategy built into the EA. This one is designed to open a trade and hold it until an opposite signal is detected. That's pure trend following, letting you capture the meat of the move without being shaken out by short-term noise. Plus, the EA comes loaded with position strategies like the profit ladder strategy. This is a powerful trend following setup. It opens multiple pending stop orders in the direction of the trend, which get triggered as price moves in your favor. You're not risking everything at once, and you can scale into winning trades as the trend builds momentum. And if you want to get even more surgical, you've got the currency strength meter built in. Want to know which currency is dominating and which is getting smoked? The EA scans all 28 major pairs and ranks them by strength. So if USD is looking strong and JPY is weak, you already know USD JPY is your play. The beauty of a system like this is you're not just reacting to the market, you're doing it with precision. The EA even offers trailing stop and break-even SL management, so as soon as the trend moves in your favor, it locks in profit or protects your capital without you lifting a finger. At the end of the day, trend following works because markets tend to move in trends more than they move in chop. The key is identifying it early, managing your risk, and staying in the move without getting shaken out. And if you can automate that process, why wouldn't you? So whether you're a seasoned trader or just getting started, the best trend following strategy is the one you can execute consistently. If you can remove the emotion, follow the data, and automate your edge with tools like the Trading Management Solutions EA, you're setting yourself up for long-term success in this market.